Oh, hi everyone, it's Wisdom Jordan right back here, and we are continuing with our series about chart patterns. So in this video, we are going to be talking briefly about a bearish flag, and just like the name sounds, it is a bearish continuation signal. So when we get a bearish flag, we just know that the market is going to continue into the bearishness or the bear trend. So it happens when the market is having series of a downtrend or static of the downtrend, and then the bulls try to change the trend, but their unsuccess is what leads to the continuation of the downtrend. So you are having series of a downtrend, and then the bulls tend to reverse the market, but this is a short-term consolidation, which is marked by the upper trend line and then this lower trend line. So after that, we know that in a series of an uptrend, we have series of higher highs and then the higher low pattern. But you can see here that these are short-term high and higher low, which are considered consolidations, and therefore their unsuccess is what leads to the break of the lower trend line. Sometimes there's a retest, and then you get a continuation into the bearishness. Okay. So you can see that right here we are having a downtrend, and then sometimes this is what we call the flag, this move which initiates this flag. So right here there is what we call the pole, and then you have a continuation. So in this retracement, that is when the bulls are trying to change the trend, but they fail, and then they break this lower trend line, and then we get a continuation into the bearishness. So you can see that right here we have a series of a bull run, which is short term, and this is considered a consolidation because it is not in the proper format of the uptrend. So if we get this, the break and retest of upper levels of resistance, that is when we get what we call the bullish run. So you can see that right here we have this short-term consolidation, but the short-term consolidation is marked by an upward move, which shows that the bulls are trying to change the trend, but they fail. Okay, after their failure, there is a breakout of this lower trend line. So therefore, we could put our sell stop order right there. So before we enter, we have to make sure that on this lower trend line, there is a candle which has closed entirely below it. So we wait for a candle that closes entirely below this lower trend line. So if a candle is cutting through the trend line, we do not use that candle. So for example, you can see this candle here. We wouldn't have entered using that candle. But you can see that right here we have this this doji, and it is followed by this big bearish candle. So therefore, on this big bearish candle, that is where we would have put our sell stop order. So I recommend, if you didn't watch my videos about candlestick patterns, I recommend that you go back and watch them, because after getting this doji, we wait for a big bearish candle, and it formed right here. So the decision has been taken. So this candle here shows indecision. Okay, so this doji here is what shows indecision. So the market from here could still push high, but now since we have confirmed that we are going downwards by this this red candle, which is bearish, so we therefore put our sell stop order and then wait to catch the wave down. Okay, so that is how we trade this bearish flag. So when you get a bearish flag in your chart, it means that we are going to continue with a downtrend. So what happens is that the market is slanting or is falling, and then the bulls try to push the market, and then a form of short-term consolidation, which is increasing. So in this short-term consolidation, which is increasing, there is a break of this lower trend line. Sometimes there's a retest, but since it is a continuation, I do not recommend to wait for retests, just like you can see here. You can wait for the retest and it never comes. So you just put your sell stop order and wait to catch the wave down. So in these continuations, there are normally different types of consolidations which can occur. So we have this consolidation which can occur, and it shows that here there is what we call a bearish flag, and it leads to continuation of the bearish signal. So, or sometimes there is this flag right here, which is caused by the bears, and it is what we call the bullish flag. It is followed by a continuation into the bullishness. Okay, or sometimes there is this also, which equals to formation of the upper and the lower levels of, here we have the supports and resistance, and then you can have a continuation downwards. This one becomes a bearish triangle, and then there is another one, which can form on an uptrend, and you have the level of support, resistance and support, and it breaks upwards, and that is what we call the bullish triangle. So you have to be vigilant about all these patterns. So we also have the witch and they also signal continuations. And then we also still have the peanuts, which also still show continuations within the market. Okay. Thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. I'll see you in the next video. My name is Jordan, and bye bye.